Every year, criminals come up with new ways to launder their money. And every year, companies need to come up with new ways to prevent it. With that being said, blockchains have become incredibly useful in tackling this problem. But what is a blockchain? How do they work? And who are using them to help with KYC? In today's video, we will be taking a look at what is a blockchain, how do blockchains work, and how are they useful in KYC. Hello and welcome to another KYC Lookup video where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. We also have a special announcement to make, so be sure to watch until the end to find out what it is. So, on to today's video. What is a blockchain? In simple terms, a blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a digital ledger of transactions that is duplicated and distributed across the entire network of computer systems on the blockchain. How does a blockchain work? A blockchain collects information together in groups, known as blocks, that hold sets of information. Blocks have certain storage capacities, and when filled, are closed and linked to the previously filled block, forming a chain of data, known as a blockchain. Blockchain's most well-known use, and maybe most controversial, is in cryptocurrencies. Cryptocurrencies are digital currencies, or tokens, like Bitcoin, Ethereum, or Litecoin, that can be used to buy goods and services. Cryptocurrencies use blockchains to act as both a public ledger and enhanced cryptographic security system, so online transactions are always recorded and secured. How are blockchains used in KYC? Banks and other financial institutions are required to carry out KYC checks in order to verify customers' identity and ensure they are not entangled in illegal activity, such as bribery or money laundering. The actual KYC processes vary across the board. On a basic level, everyday processes such as opening a bank account or sending payments requires you to meet certain criteria, and the onus of verifying that you do falls totally on the institutions offering services. In these instances, customers may simply be asked to provide a passport photo and address. Current KYC processes often rely on an intermediary to verify users' identity, which adds another layer of data sharing and risk to the interaction. Blockchain technology offers a solution to these practices, allowing users to prove their identity in a protected manner, while still retaining control of their data. Institutions are increasingly looking for ways to outsource these hugely time and resource-consuming checks. Data intelligence firms such as GBG are leading the way in establishing effective compliance management and identity verification processes. To continue this process, innovators must continue to implement blockchain technology into KYC processes. A blockchain's role in KYC verification is simple and elegant. As a decentralized ledger technology, blockchain technology will allow for the collection and storage of data from multiple governments and private data portals into a single immutable, secure database. The biggest blockchain companies. Blockchain is becoming a legitimate distributor in a myriad of industries. The technology has become so promising that none other than tech giant IBM is investing more than $200 million in research. More than 90% of European and US banks are researching blockchain options. The technology can revolutionize government, finance, insurance, and personal identity security, among hundreds of other fields. Kicking off our list of the biggest blockchain companies is Blockchain.com. Blockchain.com is a cryptocurrency financial services company. The company began as the first Bitcoin blockchain explorer in 2011 and later created a cryptocurrency wallet that accounted for 28% of the Bitcoin transactions between 2012 and 2020. Blockdaemon. Blockdaemon offers node operations and infrastructure tooling for blockchain projects across their lifecycle. Early on, it was testing, then staking and reporting, clusters for exchanges, custodians, and finally APIs for developers. Blockdaemon's node management platform helps auto-scale blockchain networks securely with enhanced monitoring, backup systems, HA clusters, APIs, and cloud-managed node monitoring of on-premises solutions. Chainalysis. Chainalysis is the blockchain data platform. They provide data, software, services, and research to government agencies, exchanges, financial institutions, and insurance and cybersecurity companies in over 70 countries. Their data powers investigations, compliance, and market intelligence software that has been used to solve some of the world's most high-profile criminal cases and grow consumer access to cryptocurrency safely. IBM. IBM is the largest company in the world embracing blockchains. With over $200 million invested in research and development, the tech giant is leading the way for companies to integrate hyperledgers and the IBM Cloud into their systems. IBM has already helped more than 220 businesses develop applications and data governance tools that run on blockchains. Republic. Republic is a blockchain-powered investment platform that allows users to easily and securely invest in startups, real estate, crypto, and even video games, allowing people who previously had no access to angel investment opportunities to build a robust portfolio. The company is incredibly selective about the startup it lists for investments, with only 3% of applications being accepted, meaning that Republic users can find peace of mind in potential for their investments. And finally, Spring Labs. Spring Labs enables faster and more secure information transferring between businesses by making use of blockchain's powers of transparency and real-time data ledger technology. The platform enables businesses to verify identities and reduce fraud by prioritizing the inherent safety that comes from blockchain capabilities, reducing costs, protecting consumer data, and making it easier to approve credit transactions quickly. So, can blockchains and KYC work together? As you can see, technology is being used more and more and in so many industries, whether it's facial recognition to verify a person or financial transactions being stored securely. So the question needs to be asked: is there any need for businesses to use KYC analysts to conduct KYC checks? I would say yes. There is room for both. A blockchain shouldn't be used to replace KYC checks being conducted in-house. A blockchain KYC utility would not remove the need for financial institutions to perform screening and monitoring of customers. Instead, it provides a streamlined way to gain swift and secure access to clean, up-to-date customer data. Well, there you have it. What is a blockchain? How do blockchains work? And how are they useful in KYC? Now for the special announcement mentioned at the start of the video. We have now launched our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details, and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.